Hey guys, Mark here from Tape Trader TV. Listen, when you're trading the tape, it's not all about the time and sales and depth of market. That does come into play, of course, when you're trading the futures. However, when you're trading FX or you're trading something where perhaps the time and sales aren't quite as key, it's all about how the market is responding to a key level. Now, look at this currency pair here, US dollar yen. It's the 100 is a psychological key level. It's a level that's been in play for a while. It's under a support level from a long time ago. It's something that everyone is watching, and you can see by the sudden moves we get when we tag that level. But what's interesting to me, and in fact, this happens all the time. I've seen this years and years and years where I've been trading FTSE back in 2006, Dow, all the markets do this kind of pattern. So this is a tape pattern that is worth watching. You have your line at your key level and you watch. The symmetry around this is uncanny. Now, nothing to be surprised about. This is how the markets move. They move. There's a lot of symmetry when you get through these key level points. So we get the breakthrough, and obviously straight away there are a load of buyers who have buy orders under that 100 and cause it to shoot back up to 115. Now, I'm not really interested in getting involved from the long side on this trade. I'm sticking to shorts until we break above the initial impulse high. So let's see where the impulse high goes. It goes 15 ticks above. So I draw my line there. But what I now do is I can now extrapolate that and say, well, 15 ticks below is a really good place to put a target for any short trades. And lo and behold, look at that, we stop dead to the tick. So you start to mirror and bracket and look at this very short piece of trading action, but in terms of supply, demand, price response. So price response straight away, this is the little area that's very, very key to me, is that we've popped up 15 ticks, we pulled back. Now bulls are expecting this to rip up back and do a 50 tick pull back to the high. When it starts to roll over again, to me, the short trade then sets up. The short trade with the target of 15 ticks below starts to set up very nicely indeed. And that's exactly what happens. All those little short-term buyers who thought that was going to rip up to highs are caught out, and we start to roll over. And very, very quickly, we get a 20-tick move to the downside. Bang, there's your short scalp. You're now waiting to see what the price response is as we come back up to the 100. We come back up to the 100. It wicks above it. It starts to consolidate around, but now I've got my trade tape bracket. I'm bracketing the high, 15 ticks above. I'm bracketing the low, 15 ticks below, and I've got my pivot area at the 100. And I want to see how price responds to each of those points. Now we start to get overshoots, but look what's happening now. Price is accepting a level below the 100 level. So that has become a key level of resistance. And my next trade for this is going to be selling short a break of that 99.85 level, because the price has been accepted here. The bulls have got a long time to respond to this supposed bargain price level under 100, and they're not taking it. And maybe we'll get a live trade now as this occurs. With any luck, we will. We'll get a break through this, and we can take a break. But the point is it's watching how price is responding to the level. The level is 100. There's no ambiguity about that. That's key. That's sufficient. We understand that. Now the upper band, if you like, is 15 ticks above, 15 ticks below. You've got a scalp trade based on that first initial impulse. But now I don't mind waiting to see what happens. So scenario is for me now: break of the 85, going to hammer it short, look for a scalp to the downside. The other scenario is if we fake out, and potentially that will be a stop for me, and then we start to rip through the 100 and hold. So let's just look at that for a second. Oh, I've lost my drawing pane came on and we took that out. So if we dip through there, we rip up and we hold here, that opens up a scalp to the long side, targeting that 15 and potentially a break higher. But there's a difference there in how I'm going to trade that and what I'm actually looking for, depending on the scenario we get. So it's framing the trade, bracketing it around that key level. This is very much a short-term scalpers type of strategy. However, this happens on all markets, all time frames, and it's something to look out for.